It's been a while. Did the peeps again. So, um, last video I made was literally about bias. Yeah, I think so. Market directional bias and all of that. And people saw me marking out supply zones and demand zones, and they did not really understand what that was. Okay, so fine. In this video, we're going to talk about supply zones, demand zones, imbalances, efficient markets, and inefficient markets. So, without wasting much time, let's get into the video and see what we have. Yeah. So, supply zones are literally indecision candles before a big sell. Supply zones are literally indecision candles before a big sell off. So, those little tiny indecision candles before a big sell off, let's say market was in this uptrend. Whenever the market pulls back, it comes back into a demand zone and then goes up. That's what demand zones are. Indecision candles before the impulsive move. Indecision candles before the impulsive move. So supply zones are literally the opposite. They are the indecision candles before the impulsive move to the downside. Indecision candle, impulsive move to the downside. So a lot of people are going to be asking, how do we mark supply zones? How do we mark demand zones? Okay, for me, I literally mark my supply zones as the last candle before the impulse. Some people will mark it from the last bearish candle before the move upward, but no, I mark mine from the last impulse, the last candle before the impulse, which here is actually this candle here. This candle here is actually my demand zone. So yeah, you can see once price pulled back into this candle, it continued buying. And what makes this a demand zone is this impulsive move right here that took place, this buy impulse that took place. That means a lot of institutional traders at limit placed right here ready to buy the market into more premium price over here, into more premium price right here. So the move from here skyrocketed, took the market up, gave a retracement to the downside, went back up. Market eventually came back to fill this imbalance. Yes, price mostly comes back to fill imbalance, and then we can see the enormous leg of price action to the upside. Price just kept moving and moving to the upside. So that's the literally what imbalance demand zones are. Now imbalance, or what most people will say FVGs, is this space in between candles, in between two candles or three candles. Yeah, it's a three candle something. This space in between three candles that's unmitigated by the next candle. Okay, fine. So this is the first candle right here. That is our demand zone. The second candle is this huge candle, the impulsive candle. And then the third candle is this one right here. So you can see the leg of this candle did not touch the wick of this candle, did not touch the wick of this indecision candle before the impulsive move. So right here we have our imbalance. Our imbalance is just right here. Let me delete this so that you can see. This whole space here is our imbalance. So when price rallied down here, We can see price filled some of this imbalance, but we still had imbalance here. Some people will call this fair value gaps, but I call mine imbalances. That is an inefficient market where price is leaving gaps for big O's behind, like this. You can see once price rallied in here, you can see imbalance right here, imbalance right here, mm, imbalances right here, a lot of imbalance in the market. Just right here, you have another imbalance of fair value gaps. I prefer calling my imbalance. But that's just how it's more logical to me. And then when we talk about supply zones are literally the last indecision candle before impulsive move to the downside. A lot of people are gonna mark their supply zone from here. Yeah, makes sense. That's the traditional idea behind supply zones and other blocks. You're just gonna mark it there and then, but this is the disadvantage of this. You can see how large this space is, but if you refine your supply zone to the last candle before the move, because institutional traders don't use the chart, they don't see where they don't see where the last opposite candle was printed, just like here. They don't see all this. They don't see where the last opposite candle was printed, so they will rather buy from where market make the impulsive move to the downside, breaking structure right over here. Impulsive move to the downside. When market comes back here, you can see market sold off again. And let's see, you can see if you check, you see how far this sell went. This sell went so far, breaking structures here, right here, breaking structures here to the downside. You can see how far this sell went from here, and this buy too from here, from the demand zone right up, straight push to the upside. And that's just how it goes. And you can find this on any time frames. You can literally find them on any time frame. You can go to the 1 hour time frame, you're gonna still find it. Yeah, that's the magic. As long as you're in line with the trend, in line with the trend, you're gonna still find it. You see one here, right here. These are a demand zone. Price came in, but today, see, price just came in. Feel the imbalance, the inefficiency in market right here. You can see the inefficiency. Let me zoom in a bit. Let me zoom in a bit. You can see the inefficiency right here in market. Price came in, filled it, straight leg of price action to the upside. And see price came in, filled this, straight leg to the upside, creating another higher high. Came back in, straight leg of price action to the upside. So you can see price back to back filling this. You can see here too, price just came back, straight leg of price action to the upside. You can find this any time frame. Let's go to the 2 hours. Let me see if we are gonna find something similar on the 2 hours. On the 2 hours, what do we have on the 2 hours? Okay, we have this supply zone right here. Price came here, sold off from the supply zone. Massive sales, massive sales, thousands of pips, hundreds of pips, massive sales to the downside. And I don't just want to go too far from the market. Current price action. Can see these other supply zone here. Okay, price hasn't tapped in yet. Let's check to the left hand side of price. As price tapped into the supply zone. The price tap into this. Oh, okay. Okay, I stopped in here, give a little reaction and failed. That's because we're already bullish from this other side. Okay, fair enough. That's understandable. That's one thing about Forex. Not every time that your order block or your supply zone works. Sometimes they fail. Doesn't mean you're wrong, but simply market doing its thing. So this is on the 15 minutes. I just want to show a few more supply and demand zones. Think I have some here. Think I have some here. Okay, fine. Supply zone. Last candle. Remember, we are not taking opposite candles. You look at what you are leaving on the table. Lots of pips being left on the table. No, no, no. Instead, I refine mine to the last candle before the impulse. Last candle before the impulse. And you can see clean entry, clean entry. Price came in right here, tap sold off, give another supply zone, indecision candle, impulsive move to the downside. We mark this out. Mark this out. Price came in, tap sold off. And see massive sales to the downside. Great amounts of sales. Wow, that's massive. Okay. Then right here we can see another supply zone right here. I see another supply zone right here. Um, that's here. Okay, a demand zone. Sorry, I said supply. Price came in, taps, started buying to the upside. Massive buys to the upside. You can see price was just on the bullish leg of price action. We just had buys there, huge buys, and we have another one right here. Let's check. Let's see if this works. Let's see if this demands on hold. You can see if we are to stretch this demand, you can see price came in here and gave these massive buys. I think this is the last. Okay, it's not actually the last buy we had on Bitcoin. We had a few number of buys coming to the market again. So that's on the 15 minutes. Let's see if we can find something on the 5 minutes. Let's scale down as much as we can. Let me scale down as much as I can. If I can find supply zones and demand zones on the 5 minute. Okay, let's scale down. Okay, looking to our left, we have this supply zone right here. Price came in, tap, sell off to the downside, massive sales. See price selling, just dumped broke structure on both sides. Then I think we can have bought something for a buy around here. Okay, no clean price action here. Mm, okay, just right here. Price came in, tapped in demand zone, buy off to the upside. See, after that, price just kept pushing up, and price came in right here too, tapped in demand zone, pushed to the upside, even reacted from here. You can see the reaction here, but since the trend has changed to bearish in the lower time frame, we are bearish, so the more advisable to focus on selling than buying. Which other prayers do we have? That's on the 5 minutes, so you can literally see these demand zones works on every time frame as long as you're in line with trend and the directional bias. So an efficient market is literally this kind of market. Let's go back to our 15 minutes. An efficient market is literally this type of market right here where every candle has been mitigated already. Every candle has been mitigated. You can see every candle, the wicks are touching each other. Right here, the wick is touching, the wick is touching, the wick are touching each other. So that is an efficient market. Now, inefficiency in price comes in where you see price skipping some vital point like this. Price skips this, price skip this. You can see price action here. We have this imbalance right here. And when price is inefficient, you can see this supply zone right here. Indecision, impulsive move to the downside. Price always comes back in, rallies in to feel that imbalance or inefficiency and then goes the opposite direction. That's just how market price. So that's just it. Demand zones, zones where price pull into before massive sells or massive buys. And then we have supply zones, which are literally the point in market where price pull into before it sell. We have efficiency, inefficiency, imbalances, just like you can see here. This is on the 15 minutes. So every time frame you can check, you'll find these imbalances both for selling and for buying price to the next higher high or the next lower low. So thank you for watching this video. See you in the next video. Love.